Hey everyone, welcome to the Your Money, Your Life podcast. We're at episode 173, I believe, 173 of the podcast. So every week before we even get into the episode, make sure you like, subscribe, 5-star rate and review the podcast wherever you're listening or watching. If you're watching on YouTube, also make sure you subscribe and hit the notification bell and leave comments on the YouTube page, and we'll get right into the episode. First and foremost, let's look at the market over the past week. It's been a little bit green. So the past week we gained about 1.32%. We've also seen a few things in the market. The big theme of the market still is investors are gauging what is happening with the debt bill that just passed the House. So now it will go over to the Senate, and I'm assuming it will be moved quickly through the Senate and go to the president's desk to be signed into law. And then we'll have a resolution on the debt bill, which is something that I've said all along, is that we'll get a resolution. We've done it the prior 80 instances. It always comes up and it gets passed. You don't want to put the government at a grinding halt and not have the government be able to pay any bills. So this debt bill will put that at ease for the next 2 years. And with that, I think the market's going to cheer that a little bit, if it's not already priced in, because we knew this was coming down the pipeline. So the next thing that investors are going to look forward to is the Federal Reserve's June 13th and 14th policy meeting, where I think they're going to have to pause at that point, meaning pause their rate hikes that we've been seeing, making debt more expensive. I think we'll get a pause. There's not enough data to pivot. There's definitely not enough data to pivot, meaning lower interest rates just yet. I think we'll have a pause at where we're at right now, because if you saw the ADP data, that private payrolls, meaning jobs, they grew. They grew more than economists expected in May. They came in at 278,000 against the 180,000 consensus estimate from economists. So you're seeing still jobs heavily out there. Open payroll, open jobs are still prevalent, which means that the Fed will probably have more work to do on consumer spending. And so pause is the most we get right now in the June meeting, and that's what I expect. It is just more of a pause rather than anything else. Speaking of, let's move more on to more numbers and more current events. Interesting. This is a by the numbers for what the debt deal means for student loans. So student loan payments are going to resume for up to the 45 million borrowers. If this deal is passed, a provision in the deal would end the pandemic pause on payments after 8 extensions, 3 years, and 2 presidents have prohibited future pause extensions without an okay from Congress. So it'll restart the payments. So borrowers will have to be prepared to start paying their different loan servicers. Biden's student debt cancellation hasn't been affected by the proposed deal. That still remains in the hands of the Supreme Court, which is expected to issue a ruling in the coming weeks. So remember, the two different things here: the student loan pause, which has been going on for more than 3 years, and now with this new debt deal, ceiling deal passing, the student loan payments will resume for federal borrowers. And then you have Biden's debt cancellation, student loan debt cancellation, that's still being kicked around in the Supreme Court. So you have those two things still at play. So by the numbers, the average student loan balance $37,000. Typical payments are $200 to $300 payments a month, $200 to $300 payments a month. 38%. That's a share of borrowers with at least one loan in deferment pre-pandemic, and $5 billion, the monthly cause of a pause to the U.S. government. So the government was taking out a $5 billion charge there for pausing student loans for those over 3 years. That's a lot of money. So TikTok creators' personal info, like Social Security, is being stored in China where employees can access it. Forbes has reported this. TikTok denies that, but the news could give lawmakers more fuel for a ban. We already saw that. I think it was Montana, a state that literally just banned TikTok. And now they're saying that Social Securities are being stored in China. That's kind of worrisome. So yeah, that's something that's going to give a lot more fuel. And I think you see a few more states, especially conservative states, do a ban on TikTok. I just see that coming down the pipeline. So we'll have to watch out for it. So Succession, HBO. I don't know if any of you watch it. I loved it. There was 4 seasons. The finale, the series finale, was on this past Sunday. There was about 3 million people that watched it, which is a really, really strong number of people watching a finale show. Almost 3 million people. Great show, great series. It talked a lot about business. It had a lot of fun, business, thriller, drama. It was a really, really good series. So for those who haven't seen it, check it out. I'm not going to do a bunch of spoilers on it because that would ruin the show for you. In more news, this is another fact. The college enrollment rate for recent US school grads fell to 62% from 66% pre pandemic. I've seen this a lot. I think I've not only I've seen it, I've heard it a lot from people in faculty, people in academia. They're seeing one, students be just a lot less interested in schooling, whether it's they think they just want to be entrepreneurs or they want to day trade or whatever. But most of the time, you're seeing a lot of students have less interest in schooling. A lot of stuff is online now, so it's easier for them to be distracted by whatever they're doing. So there is a change pre-pandemic to post-pandemic in how kids are looking at schooling, how it's being affected, how it affects their attention, and just in general their interest in school. Which I don't know if that's a good or a bad thing. We'll have to see. Corporate price hikes are getting the side eye as greedflation trends stoke the inflate debate. So the greedflation debate, which is, and I can already know just from the the wording. So obviously we know inflation is stubbornly high, but some people are pointing fingers at corporate profits. So this idea is being dubbed profit-led inflation or excuseflation, greedflation, that some corporations are just hiking prices beyond what's needed to cover costs. So of course we know that the reason why there's inflation, right, is because the people we buy things from, whether retailers, grocery stores, any of those things, they're buying these products that we buy from the wholesalers, from the original manufacturers, wholesalers. And if those people increase prices, then the corporations, of course, have to increase prices. That passes down to us. But what people are saying is that they're increasing the prices way more than needed. If you look at the data, that's interesting. It could be, it could be possible. If you look at inflation over the past couple of years, most items, we'll get to it later, 20, 30, 25% more than the stated numbers that we're seeing. So it's very possible that they are doing so and they blame it on, inflation, but it's very possible that it's way, way more than needed in this, especially in this current time. So we talked about this earlier, but the House passed the debt deal. And so it was a decisive bipartisan vote in the House, easily passed, 314 votes to 117 votes. And again, it's going to go to the Senate. June 5th is the date that we have to get things done. So things will be done this week before the government runs out of cash. The deal will suspend the country's 31.4 trillion borrowing limit till January 2025. And it's going to cut federal spending by 1.5 trillion over a decade. We'll see. So yeah, the deal is getting done and it will be done this week, more than likely inked. And yes, we talked about job openings and what it means right now, but the job vacancies that jumped to 10.1 million in April, the highest in 3 months. So it was over economists' expectations of a modest decline of job openings. So that's a running total, of course. The Labor Department job openings, labor turnover survey showed that there was 1.8 available positions for each unemployed individual, which is also a three-month high. So we're still seeing a lot of production, a lot of job growth in the economy, which again is counterintuitive to what we're going to potentially see by the Fed. And that moves us to what the Fed will do in June. But they're likely going to pause, which has been our stance for a couple of months here, likely going to pause because they've seen a little bit on the inflation front, but not enough to pivot. And I think a pause is what they've been signaling, and that's more than likely what we're going to see in June this month. But we will have to wait and see. I think there's going to be more data that comes out, especially in the first half of the month. But that's our big stance, is that there will be a pause come June meeting, and really it's probably the area that they go. I thought this was interesting. Sean Diddy Combs is suing Diageo. He's filed a lawsuit against business partner Diageo, accusing the spirits brand. So of course you don't know, Diageo is like a spirits brand, like tequila, different vodka, all different brands underneath Diageo. And he's saying that the spirits giant neglected their joint ventures and engaged in racial discrimination. So his lawyers for Combs Wine Spirits claim that Ciroc Vodka and DeLeon Tequila, the two liquor brands that the companies co-own, are viewed as black brands and inadequately marketed and distributed compared to their other celebrity spirits. Casamigos, which is George Clooney's brand, it was acquired. Casamigos was acquired by Diageo from actor George Clooney in 2017. And it was in 34.4% of retail shops in 2020, while DeLeon was just in 3.3%. Interesting. So he's pretty much claiming that that Diageo is bigging up and supporting other non-black brands, the one that he would be owning, more than they're supporting and promoting, marketing his brand that they co-own together, and saying pretty much he's just getting slighted, and it's hurting his business, their joint business, to be honest. Casamigos is a very popular tequila brand that is everywhere, to be honest. I mean, you're right. I haven't really seen his brands. I've seen Ciroc around, but that kind of faded. I've never seen DeLeon Tequila around at all. So that's quite interesting. That he might have a play. We'll see what happens. The shakeout in court. I know Jay-Z had a resolution on one of his business suits, suing a big company as well. So we'll see how that resolution goes forward. But in the meantime, we will go to questions of the week. And our question of the week today is: groceries or restaurants? Where are most Americans spending their money? I'm, of course, going to do what I do and take a good guess on this one. I actually think both prices, both have been hit hard by inflation. I think groceries got hit harder. So I think the bigger share is going to go there. And I would say it's roughly 60-40%. And we're getting the answer, and that's actually restaurants. Okay, instead of asking where to want to eat, we should be asking where can we afford to eat instead, says the answer. And the answer is restaurants. So Americans are spending more money on restaurants. So this has changed over the years, but it's saying that the Americans are spending more money on groceries. That's changed, excuse me, more money on restaurants. But the data shows that it's changed multiple times over the years. But right now it's slightly edged towards restaurants. And I think that's also because groceries have gone up so much for some people that they just said, all right, I'd rather just go out to fast food place or a quasi fast food place and eat rather than buy groceries all the time, especially with the advent of different apps where you can also order. All right, that's an interesting one. Another question: what percentage of Amazon reviews are potentially fake? Potentially fake. Oh, that's interesting. I would say like the first few, right? Like someone just had to boost up their page, they would probably do a fake one, fake few reviews. So I would say roughly 10 to 15%. Oh, wow. The answer is up to 42%. 42% could be fake on Amazon reviews. That's unfortunate. Up to 42%. That's roughly half of the views. An analysis found by a fraudulent review detection service, FakeSpot, they found that about 42% were bogus. The company uses our AI to analyze billions of customer reviews. It detects fraudulent product reviews and third-party sellers in real time. And they saw a lot of these were generated by bots and different things of that nature. So crazy. 42%. I wouldn't have expected that. That's a lot of bot behavior. Speaking of bots, there's a lot of talk right now still about AI and different things. We're seeing NVIDIA, different stocks go surging on just this crazy hype right now. And again, hype is a word that I use in the sense of, yes, some of the technology and other things will be real, but looking at different valuations of companies that are growing off of hype, you just got to see people be careful. That's when it gets to the murky waters that people aren't familiar with treading, to be honest. So we'll see. We'll be watching that. We'll also be watching the NBA Finals, which starts tonight. I got a prediction. I'm going Denver in 6. What the Heat's done has been crazy. I just think Denver's the better put together team in the sense of total team. Denver can score. They could play a little defense. They're better team ball. the Heat, if they shot the ball so well throughout the playoffs, if they shoot the ball, they don't shoot the ball, they just don't have enough offense. If they don't shoot the ball well enough for the rest of this playoffs, for the rest of the series, for this series, they won't be able to win because Denver's just going to keep scoring. That's my prediction. We'll see where it lands, and we will be back here next week to talk more business, finance, and personal finance news. Talk soon.